All right, all right. Good morning, you melon heads. Happy Inflation Day, everybody. This one's going to be big. I don't know how big, but this one is going to be big. This is our first inflation reading since the Russian tanks started rolling across the field in Ukraine, sending commodities racing higher, sending gas prices higher, all that fun stuff that we're all too familiar with. Well, today will be the first one, the first reading since all that nonsense started, and it's going to be a big one. We had White House Press Secretary Jen Psaki was out yesterday with her talking point, calling it the Putin price hike, repeating it over and over and over again. Look, Putin played a part in this. You know, the war obviously made this problem worse, but who are we kidding, everybody? The inflation problem has been here for well over a year now, right? Month after month after month, the inflation number has been getting bigger and bigger, while our government officials said it was transitory, while said it was below their expectations and said it was going to come down and that the supply chain problems were mostly behind us. They're not. It's not. Inflation continues to get worse. Putin is part of it, but it's not because of Putin. It's because of all of the stupid money printing. It's because of the stimmies. Everybody wanted their stimulus checks. Everybody wanted another stimmy from the government. Everybody wanted another trillion, another trillion, another trillion. Well, here we are. Here we are. What we're living through today is the price of economic illiteracy on a global scale. All right? And everybody's going to read the CPI report today and be like, oh my God, what happened? How could they let this happen? We're going to need another stimulus check now. Well, yeah. Then you wonder why it happens. So there we go, folks. My guess, I don't know. I'm thinking around 8.9%. And again, these guesses are totally randomized because there's really no rhyme or reason to it. The government will tell us whatever they want to tell us. So let us know in the comments. I see a lot of familiar faces in the comments, by the way. Hello, all you melon heads. I see a lot of folks here with us this morning so early. Welcome, guys. I have to warn you, I'm not a morning person. I don't do this morning thing so well. My best hours are in the evening, but it's CPI. It's inflation day. We must press on. And also, hi, Mom. Hi, Dad. I love you guys. But I was thinking yesterday that the Federal Reserve and the BLS, the Bureau of Labor Statistics, the BLS is the one that puts out the CPI number, the Consumer Pricing Index. They have this fine line to walk, all right? Because if they tell the truth about how high inflation really is, and if you go look at shadowstats.com, where they measure inflation using the same methodology they used to use back in 1980, inflation right now is over 16%. That's based on the February number, all right? And if you rent, your rent has probably gone up more than 16%. Your food bill has gone up more than, 16% sounds little more realistic than the 7.9% number that they've fed us. If they tell the truth about how bad the inflation problem is, people will panic and they'll lose confidence in the Federal Reserve's ability to handle that. Why people still have confidence in the Fed is beyond me. I have zero confidence in the Fed, but John and Jane Q. Public still, for some reason, believe that they have this under control. You talk to anybody who doesn't follow this stuff regularly, you talk to them about what a hyperinflation scenario might be, about Weimar Germany and Zimbabwe and some of the countries where they had, you're going to get the same answer every time. They'll say, oh, they would never let this happen. It can't get that bad here. That can't happen here. Like as if just daring it to come true. All right. So most people, believe it or not, still believe that they have this under control. And they are the ones who have done this seemingly on purpose. So the Fed has to walk this fine line. They cannot tell the truth without causing a panic. All right. So they have lied, right? I'll say it, they outright lie, all right? I mean, I used to say they manipulated the statistics lower to underreport the data, but now they're just outright lying, all right? When you look at some of these rent numbers and owner's equivalent rent, it's just a lie, all right? Well, if they lie too big to the point where even John and Jane Q. Public no longer believe them, then you get that same crisis of confidence in the Fed, and you get the same result. People panic and they start to dump their currency for anything and everything they can get their hands on. And that's when you get this psychological inflation that becomes a feedback loop that feeds on itself. Right now we have, like I've like to say, we have mechanical inflation, right? We dumped helicopter money on the system. At the same time, we locked down the economy, restricting the supply of goods and services. Way more money, chasing way less goods and services, prices go up. All right, that's what we have right now. What we don't have yet is this panic where people rush to dump their dollars. We may start to see that very soon. And the banks have actually been warning about that recently. We got a note from, who was it? It was Goldman Sachs, I think, or Bank of America, were saying expect an inflation shock as people rush to get more exposure to commodities as a hedge against inflation. Talking about how investors in large numbers will be fleeing into commodities if this inflation number comes in too high. Well, that is the early innings of Von Mises crack-up boom is what that is. That's people dumping their dollars for anything and everything they can get their hands on. And it looks like that could be where we're heading. Anyways, it is now 8:21. The numbers will be coming in a couple of minutes here. We're going to shrink my big fat melon of a head. And if you want to follow along at home, what we're looking at here, this is bls.gov/CPI. This is where the numbers will be posted. All right, bls.gov/CPI. And where you're going to see is down here in the lower right where I have my mouse, where it says news releases. You still have the March 10th number there, where CPI came in at 0.8% in February and 7.9% year over year. You also have some handy little charts here showing you where the inflation was last month. Obviously, food and energy led the way. And then this is what the actual report looks like when you open it up. You get a couple paragraphs of text where they give you the talking points they want to give you, and then you get the actual data here where you get the item broken down by type, by the month-over-month number over the last 6 months or so, and then here you get the year-over-year number. All right. So that's what the data will look like when it comes in a few minutes. Real quick, let's see what the markets think of what is to come today. Right now, the S&P looks set to open up about 10 points. The Dow is set to open almost 50, and the NASDAQ is set to open almost 50. So for right now, markets don't seem very worried about what's coming. The 10-year Treasury yield at 2.78 right now showing. I saw 2.82 when I looked this morning. So interest rates are heading higher. If we get a big enough move in CPI right now, markets will tank on that news because that means a more aggressive Fed taking away the punch bowl faster and harder means stocks will suffer. Just take a look. Looks like gold futures are up right now about $11 an ounce at $19.50, and silver is up about 22 cents at $25.21. So we're also going to keep an eye on precious metals as they react to what's going on in the indexes. And I see Mr. Harry Dan too, sir. Thank you very much for your super, sir. He says gold, silver, and foremost food and good community. Thank you, sir, very much for supporting the channel. I appreciate that. And yes, gold, silver, and absolutely food. I've been saying on this channel for a while, folks, what's happening in global food markets is only just beginning. The fertilizer shortage has not even begun to show up in global food prices. So, we all see this slow boil happening with inflation and with food prices. Don't sit around and wait. Get yourself a supply of non-perishable food and stock up now while you can, folks. Last year, a used car was the best investment you could have made in 2021, was a used automobile. This year, I think non-perishable food will be the best performing asset class this year. I think it's going to see possibly a 100 or 200% price increase. There aren't many stocks that are going to do that this year, but non-perishable food probably will. Anyways, I'm on my soapbox. Real quick, let's just look at a couple of the commodities right now. We talked about gold and silver. Copper is up a little bit, almost 0.5% right now. Platinum and palladium are down, interestingly enough, 1% and 2.5% respectively. Oil is headed higher. West Texas Intermediate 97.89. Natural gas at 6.76. Let's just look at some of the agricultural commodities while we're here. U.S. wheat is up 1.8% at $1,100. U.S. corn, $7.71, up about 0.9%. And soybeans also up about 0.9% at $16.70. So looks like commodities mostly green this morning. We'll see what happens when those numbers come in. And I just want to take a look. What we have up on the screen right now, make sure you guys can see, and you can. This is the numbers from February, the March CPI report for the February data. And right here you see this was the 7.9% year over year number and the 0.8% month over month number. All right, now a couple of the highlights. According to last month's data, food had only risen 1% in the month of February, or 7.9% for the year. Again, that is a gross understatement. Anybody who does their own grocery shopping knows food is more than 7.9% more expensive right now. Anybody knows that. That also includes food away from home, restaurants. And again, restaurants have gone up even more because they're being crushed by labor. The big one last month, and the big one it's been for a while, has been energy. And that's going to be the big one again this month. Energy, on average, was up 25.6% year over year last month and 3.5% for the month. And that was spread across all commodities. You've got gasoline, you've got fuel oil, you've got electricity. All right, all of those things were more expensive. So 25.6% in energy. That is a very big one. Another one that has been a big contributor has been new and used vehicles. All right, that's been driving a lot of inflation. New cars up 12.4%, which is kind of irrelevant because you can't even get a new car. You just can't get them. We still don't have any chips. And then, I had mentioned how used cars had been the best performing asset of 2021, up 41.2% year over year. I would also note that in the March release for the February data, we were down 0.2% for used cars. And I believe that trend has continued into this month. So used cars will make less of an impact on the overall number this time around. I don't think nearly enough to make any difference in the final reading, but that's one, I guess, silver lining to this big, ugly gray cloud would be used cars are a little cheaper at least. And the one that I harp on this channel all the time, which just drives me nuts, is shelter, being 0.5% or 4.7% year over year. And this is where the government just outright lies to us, okay? The biggest input to the whole calculation, by far, almost 24% of all the math that goes into the CPI is this statistic called owner's equivalent rent. And according to this, owner's equivalent rent was only up 0.5% in the last number, or 4.7% year over year, which is outright ludicrous because look at these numbers. This is from rent.com doing their average trends across all the data that they have, and they say the rent is up somewhere from 24 to 21% year over year. And you see these numbers down here, 24 to 21% year over year change in rents. But if you go to the BLS statistics, they say 4.7%. That's where the disconnect is between reality and the CPI report. All right. And the way they calculate owner's equivalent rent, I'm not kidding, folks. They pick up the phone and they call a homeowner out of the blue and they say, oh, hi, this is the government. How much would you rent your house for unfurnished right now if we had to rent it from you? And that homeowner is given no time to look at comps, no time to look at what the market is, what things are renting for in their neighborhood. They just throw a number out there. And what would you do if you're a homeowner and somebody were to call you and say that? You'd probably give them a number that's about your mortgage payment, maybe plus $100, maybe plus $200, not realizing that if you actually looked at what the market was offering, you could probably get your mortgage payment plus $1,000 now. But no, that's how they measure the rental increases. They don't actually look at what the market is charging for rent. That'd be the easy way to do things, right? Take the average of all the rents across the country. No, they call up homeowners and say, how much would you rent your house for? That's how they do it, and that's how they lie to us, folks. So we're going to keep an eye on those things: used cars, energy, food, and shelter. Those are the big ones right now. We're now 1 minute away. Let's see. It is 8:30. They could be coming in any minute now. We're just going to keep refreshing the screen here. Again, my guess was 8.9%. The market is expecting 8.4% year over year. We still do not have a post yet, but we are going to press on. Yeah, you'd love my feedback. My feedback is give us the release at 8:30. Still showing the March number here. Let's just see real quick. Has the market reacted yet? It has not. Still no move from the market, so I guess it has not hit the tape. Here we go. CPI for all items rises 1.2% in March. Gasoline, shelter, and food indexes rise, and the year-over-year number 8.5% year-over-year. So they are lowballing, if you ask me. I'm going to read a little bit from the top here, and then we'll go look at the numbers. The Consumer Price Index for all urban consumers increased 1.2% in March on a seasonally adjusted basis after rising 0.8% in February. Over the last 12 months, the All Items Index increased 8.5% before seasonal adjustment. Increases in the index for gasoline, shelter, and food were the largest contributors to seasonally adjusted all items increases. Luckily, it's only fuel, food, and shelter. Thank God it's not things we need, right? Jesus. The gasoline index rose 18.3% in March and accounted for over half of the all items monthly increase. Other energy component indexes also increased. The food index rose 1% and the food at home index rose 1.5%. The index for all items less food and energy rose 0.3% in March, following a 0.5% increase the prior month. The shelter index was by far the biggest factor in the increase, with a broad set of other indexes also contributing, including those for airline fares, household furnishings, operations, medical care, motor vehicle insurance, and in contrast, the index for used cars and trucks fell 3.8% over the month. So there you have it. The vehicle prices are finally starting to come down, although not enough to change the overall trend here. The all-item index continued to accelerate, rising 8.5% for the 12 months ending in March, the largest 12-month increase since the period ending December of 1981. Now, I just want to emphasize here, when they say the biggest increase since December of 1981, that is using today's methodology. Back in December of 1981, they used different methodology to calculate. And if we calculated the same way, we would be much higher than the December of 81 number. I just want to reemphasize that over the years, they have changed the statistics to underreport the inflation number. And the government is financially incentivized to do so, because all of the cost of living adjustments and increases in Social Security and all of these things and food stamps, all that, it's all based on CPI. All right, so by underreporting CPI, the government gives people less of a raise. They are financially incentivized to understate. The energy index rose 32% over the last year, and the food index increased 8.8%, the largest 12-month increase since the period ending May 1981. Again, forget the 1981 comparison because it's apples to oranges. All right, now here's some of the numbers. Again, we've got the 1.2% March number and the 8.5% year over year. Here is the food index with a 1% month over month and 8.8% year over year. Food at home rising 1.5% or 10% for the year. Food away from home rising less than that, 0.3 or 6.9 year over year. Energy now 32% year over year for the energy index. That's up from the 25% in the numbers that we had read previously. And the biggest number there, look at energy commodities, up 48.3% year over year and 18.1% month over month. 18% in 1 month. And folks, those numbers are going to continue rising because what are we doing? All we're doing is dumping the oil from our Strategic Petroleum Reserve. We're not drilling anymore. We're not pumping anymore. We're not providing any new supply. We're just selling what we've already taken out of the ground. Energy is going to get worse from here, folks. It's only going to get worse. Fuel oil, 48%. Energy services, 70%. Wow. Oh, I'm sorry. That's fuel oil, 70%. Energy services, 13.5% year over year. And utilities, pipe gas, 11.1% year over year. And thank God spring is here, because I don't want to be heating my house with natural gas getting more expensive like that. All items less food and energy was 6.5% year over year or 0.3% month over month. Just want to zero in here. New vehicles still got a little bit more expensive. New vehicles are up 0.2% month over month, 12.5% year over year. But there's the used vehicle numbers finally coming down, at least with some significant force behind it, down 3.8% in March, still up, though, 35.3% year over year. And where is it? The shelter index, they are still outright lying about the shelter index. with a 0.5% month over month increase and a 5% year over year. And if they were to suddenly decide to tell the truth about how much the rent has gone up, this entire index would leap instantly, probably another 5 points. All right, this thing would instantly shoot up to 13 or 14% like that if they were to tell the truth about what the rent has done. Now, real quick, let's just see what we've got for owner's equivalent rent here. And the owner's equivalent rent index, they are saying 0.4% for March. Again, that is an outright lie, folks. The way they measure owner's equivalent rent, it's not a direct lie because they're reporting the data. The way they measure this and the way they call this the cost of shelter is a lie. All right, and that's why our password today is CP lie. All right, let's take a look at what the market is doing right now. It looks like the S&P, not really much of a reaction to this. Futures are still up 7 points. The Dow, again, not really moving one way or another, up 23 points set to open. And the NASDAQ is set to open about 44 points higher. So stocks not really making a move off of this news. Let's see what gold is doing. It looks like gold has come in quite a bit. Yep, this is looking at a one-day chart going back a few hours. It looks like gold is selling off a little bit on this news. I just want to mention, folks, don't get caught up trying to trade the immediate reaction to a CPI release because right now you've got the algorithms are taking over, the software programs are trading against each other, and you just don't want to get caught up in that mess. All right, you're going to get steamrolled if you try to compete with the algorithms right now. They're trading a billion times a second. You're going to get rolled over if you try that. Let's see what silver is doing. Silver doing the same as gold. Looks like it's trying to find a bottom. Selling off a little bit, although still up 33 cents. So we will keep an eye on that. I see Mr. Mike Bender, sir. Thank you very much for the super chat from Robin RC Models. He says, good morning, Jack. Get some more coffee and get ready for some volatility. Nat gas and gasoline bullish. I got my wake-up juice right here, Mike. Thank you very much, brother, for the support of the channel. That is good stuff, and we are going to need it. It is going to be a wild couple of days because if you have been following this channel, you know that I've been mentioning, or I did a video last week, I did a lot of research on this, that I think the CPI number and the inflation statistic could drive people into commodities and drive them higher. And then the combination of the CPI shock with bank earnings, which I suspect bank earnings are not going to be very good this week. We've got JP Morgan and is it Goldman? We've got several of the big U.S. banks report this week, one after another, starting tomorrow. And I suspect that these banks who have all been warning about commodities exposure and counterparty risk are going to report some lousy numbers. And between the inflation prospects and the prospects of Fed hiking and then lousy bank earnings, I think we could see some real chaos in stocks this week. That's why I have been slowly increasing my position in VIX call options. Shout out to Devin Brines, who's been helping me out with that trade. We've been bouncing ideas off of each other for a couple of weeks, and I think those are going to start printing money really soon because the market is just, it feels like we're toes over the cliff already. It feels that with interest rates continuing to rise higher and higher and all this bad news, I mean, we've got war in Eastern Europe, we've got food shortages, we've got an aggressive Fed, we've got an inflation problem. My God, what is going on in China? We haven't even talked about that on this channel in a long time, but I don't know what is going on in China. Now we've got Sri Lanka is defaulting on their sovereign debt. There's food riots in Sri Lanka and Peru. Something's going to give here very soon, and markets have no business being at the valuation that they're at, and I think it's going to start in the banks. I really do. And I got to shrink my big fat melon one more time, folks, because I just want to mention this story because I heard something from Dan at iAllegedly. It's another great channel, by the way, that I follow. My dad pointed this one out to me because my dad loves iAllegedly. Dan had mentioned that he had heard through his network somebody was talking about some bank, and he didn't know which bank, had a $140 billion problem. And he didn't know which bank. And I remember thinking, there's only a handful of banks in the world that could have a problem that big, right? And I was thinking U.S. banks, JP Morgan, Goldman, one of them. But then I saw this story came out yesterday that some big investor has been dumping shares of Deutsche Bank and Commerzbank after an investor sale. Some big wig, we don't know who. I'm hearing rumors that it was Capital Group, but I haven't been able to confirm that. Has sold their entire 5% stake in Deutsche Bank and Commerzbank. All right, so a big player making a massive dumping of these European bank stocks right before the banks start to report earnings. That tells me something's about to go down in the banks. All right, something big is coming, and I think it starts tomorrow. Now, I've been wrong before, folks. I'm just saying, this is not financial advice, not a financial advisor. Do your own research, your own DD, write a decision right for you, all that stuff, all that CYMA. But if you would have asked me 6 months ago, I would have told you the 10-year Treasury will never reach 2.8%. I would have said no way. I think we're already overdue for some major, major correction in stocks right now. And it starts in the banks. It always starts in the banks. And now we've got a big player is en masse dumping Deutsche Bank and Commerzbank, these European banks who, there's commodity chaos going on right now. All these producers and all these companies that have shorted commodities or sold them, the banks underwrite those transactions, and now those shorts can't cover. And if those shorts can't cover, it's on the banks. It's counterparty risk 101. And now that we have this big investor is selling these European banks, it tells me it's even closer than I realize. So it's going to be a bumpy week, folks. We've got those bank earnings start tomorrow. We've got now the biggest CPI read. If you go by the official numbers, the biggest read in 41 years. If you go by the unofficial numbers, it's actually the biggest read in probably 80 years, probably going back to the 1940s. And again, check out shadowstats.com if you want to see what a real inflation statistic looks like. So it's going to be a messy week, folks. Anyways, guys, I think we are going to call it there. Again, we are looking at an 8.5% year-over-year inflation number, the biggest read in 41 years. Don't sit around and wait, all right? This food shortage situation is happening overseas right now. It's going to continue to get worse because global crop yields are going to start declining because of this fertilizer situation, all right? I see there's a lot of new people here right now, a lot of names I don't recognize in the chat. Guys, please like this video, subscribe to my channel. But also, if there's one thing you take away from this video, it is go out and get yourself some non-perishable food and stock up now because food shortages and food price inflation is coming. It's going to get much worse. Don't sit around and wait. You have been warned. And I just want to send a shout out to my Patreon supporters. Thank you guys for everything you do for the channel. I really appreciate that. There's a link in the description down below. And with that, guys, I think we are going to wrap it up here. Again, I want to thank you for joining me. Please like and subscribe to my channel. And until next time, live small and dream big.